Good morning, good afternoon, good evening, my dear friends, wherever you are in. Sabitrimalla, all the way from Australia, Canberra. I'm originally from Nepal. I think if you know my story, so probably I'm a mother of 3 children and a corporate worker, still working full time. But I am very much passionate about foreign currency exchange market. I'm trading binary option. I'm trading foreign currency exchange market, Forex, using a MetaTrader 4 platform. Okay. So there are different brokers I use. The main topic that I came up today, most of the time that I got to know from my team that, okay, why I took the same trade, but why did I actually lost the trade, and why my trade is in minus while someone else is making money in the same trade that it was called whether to buy or whether to sell. And I will tell you the reason why. Hopefully this video will help you to understand that if you actually follow certain emotional barriers before you take the trade, you might be a consistent, profitable trader in the world. Okay, so the whole idea is to make sure that you get some value out of this information. Okay, so why emotions mesh with the trades? So there is some emotion that we have to really control, because we don't just want to make a decision based on our emotions. Okay, based on our emotions. So here there are so many emotions you already know. Probably you already been trading for a while, or you're the beginner. Look, when you see the red, if you are using MetaTrader 4, your emotions goes, oh, you're high, I mean, you're tempered, oh no, what's going to happen, market is going in the wrong direction. And probably you will even close your trade while you are actually in loss, but you never know that the market can pull back, I mean, come back to the right direction, and it can hit the target as well. So I might actually share, today is actually Saturday, the market is closed, I might not be able to show you the chart, but I will quickly explain theory information, theoretically, that how the emotions actually trigger. For some of the traders, they are not consistently making a lot of money, they're losing money because of this emotions. Okay, let's get started, guys. I'm so excited. Okay, so here we go. Trading psychology and why traders screw up. If it makes sense, what I would like to tell you is there are some people in the world, they actually, some of them are making a really good amount of money. I would also tell you one thing, that the most of the millionaires are made in this market, okay, foreign currency exchange market. The reason being that is because they have put a lot of effort to learn how to trade, how to control the emotions, how to actually learn from their own mistakes. They have done a lot. Okay, sorry, actually I I screwed up, okay, as well. So here we go. All right, so just take a look at your last 50 trades. Think how your performance would look like if you actually hadn't done all those emotionally caused trading mistakes. My guess is that you actually would be much better trader if you actually could control the psychological side of trading a bit better. Hope it's making sense, because look, psychological side of your trading makes a lot of difference in the trading decision and also the result. So in this book, I mean, look, this is not the book actually, I'm just in this slide, actually in this presentation, because I created this presentation for my team so that they will be benefited while taking the trade, how these emotions can trigger and then they screw up while taking trade. Okay, number one is fear. So fear is one of the most too frequently talked about emotions in trading. I would say there is a greed as well, but the fear is because you think that fear manifests itself in a number of ways in trading, and it can be the cause of many trading mistakes. You fearing, I mean, you're not confident about your own analysis, you're doubting on your own analysis, you're not confident, and you are also not sure what's happening, and you're not learned enough, you haven't actually learned from your own mistakes. The fear of losing lets trader delay the realization of loss. I mean, look, you already fearing a lot if you might lose this trade. If you have fear of losing some trade, why do you have to take that trade? That's my question. Be certain about in your decision. Suppose you took this trade, it was your own analysis, you think this is going to the right direction, just take it. If it hits, then learn from the mistake. If it hits a stop loss, and just what you have to do, learn from the mistake. That's the lesson that you're learning, not to repeat again. Once again I will repeat, you're learning the lesson so that you will not repeat it again, which then turns into much greater losses. I know, I will tell you one thing, there are more than 90% of people, they started trading, they haven't actually end up making even, I would say, 6-figure or 5-figure of income in their first to second or third year. You know why? Probably they even gave up before that because of all these losses. They blew up their account a couple of times and they think that this doesn't work. But it is not true. That's why I'm making this video. It is not true. You can become a 7-figure, 8-figure, 9-figure trader if you follow your own rules. You have to set your own rules. Don't go after the fear. Don't go after the greed. Okay? The fear of giving back profits, which make traders actually close winning trade too early. I mean, sometimes, yes, this has happened to me as well. This has been happening to my team, still happening, okay? Because of, look, something that you need to learn yourself. Doesn't really matter how much I teach, how much I tell, how much I train. There is something that the person, I don't know, whoever is in this industry or platform, or in foreign currency or trading, they need to learn that. You have to actually believe in yourself, or you have to have faith in the analysis where you into the market. If it hits, either way, stop loss or take profit. But there are some certain scenarios that how market was almost going to hit TP, but you waited to hit TP, but the market didn't touch the TP or target, it went to the other direction. You might need to wait for the next day. And sometimes what happens is the market will never come back to that position where it was before or earlier. Okay, so same thing, there are so many scenarios like that. So fear is something you need to always avoid when you're taking trade. There are many facets, I would say, of fear in trading, as we will see later on as well. So greed is another. Okay, greed is supposed to be a good, I mean, of course it's good, like you are in this industry means you want to make some money, right? Because your money is being used by banks anyways. Why not to learn this skill set so that you can make money? But how much money do you want to make in a day? Have you set your plan? Have you set your plan? Do you have your plan? I'm going to show you a plan in a while once this slide's over. Because how much money you don't need to make $1 million to make $1 million. Seriously, you don't need. You can make $1 million in 1 year if you have a consistent plan, starting from very small amount. Okay, I'll show you that. So greed often causes a number of impulsive trading decisions that also should be avoided. Impulsive, you know what is impulsive means, right? The market will always go up and down, but you took a decision, oh, it might go up because it didn't go, it went down immediately. And that's kind of greed. Okay, traders who are influenced by greed often don't adhere, okay, to sound sync and money management principle. They don't have any kind of principle to follow. That's why they're too greedy. They just probably want to become a millionaire in 1 or 2 days or even a month of time. This doesn't work. Seriously, this doesn't work. Okay, what works? Set a consistent rule, have a plan, and just trade the time that you have allocated for yourself. Okay, it's not a gambling. You can't just have a gambling mindset when you want to make a profession, trading as a profession. You can't have it. We describe trading without set rules. I mean, you don't have any set rules. You don't have any, and you're taking or making a lot of mistakes by impulsive decisions. Totally not acceptable. If you want to grow here, you have to set your own rule. Okay, make a plan. The plan must be very strong. Okay, And hope, are you hoping, you're hoping like, oh, I'm hoping this actually I will not lose this trade because I already took it. Oh, hope doesn't work here. Because one thing I can tell you, all those traders right out there who's listening to this audio or video, market doesn't care whether you are broke. Market doesn't care whether you have children, you have to feed, you have to pay the mortgage. Market doesn't care whether you have to pay the loan. Market doesn't even care you probably is a millionaire already. It doesn't care. All it care is like you need to set your own regulation. Okay, market, we enter the market, we are not trading with these billionaires. We flow with the market, we come out with some money out of the market. We are not moving the market ourselves. Believe this thing is true. You or me are not moving the market. There are someone else who is moving the market, but all we need to do is anticipate that, hey, this market is 100% going this way. My indicators are telling me that, and news is perfectly fine, and I'm going to go. I do believe it. It may happen. I mean, don't hope market doesn't work on the basis of hope. Okay, so when they delay the realization of the loss and give a trade more room to breathe, what happens? Another example of hope is that when trade try to make up for past losses and then enter a trade with a position that is too big and not according to their rules. Means, suppose hoping means, once again I will give an example. You had a couple of losses previously, and now you want to actually cover that losses. You double the amount, or you like a gambling, you increase your leverage or over leveraged, and then you actually not setting your own rules. Okay, so there is a rule, there must be a rule that, okay, if I lose 2 or 3 trades in one day, I'm not going to trade on that day because you're already done for the day. If you won, or you already you won 3 trades, you're done for the day, you're not going to trade on that day. That's how it works. Like, you have to set your own rules. You have to mentally be prepared for whether it's going to be loss or it's going to be win. Okay, so excitement and anxious is another kind of emotion that can also trigger a traders while entering the market. Any thoughts of arousal? Okay, when trading is a sign that somewhere along the lines you went wrong. So what kind of information do you have? You might have some past results as well, right? When I took this trade during this time, market was actually not in my favor. When I mean, this kind of like, you're very anxious while taking trade and the market didn't actually go to the direction you wanted to go. And you also, you broke your rule, and then that's why you shouldn't do that. This kind of like, sometimes people break a rule because they're too excited. Sometimes people break a rule, they're too anxious. It doesn't work in trades. It doesn't work. You have to be, I mean, you must be always fixed in your emotions, fixed in your goals, fixed in your plan, fixed in your rules. Then it will work for you if you want to make this as your profession. Okay, we want to make sure that, yes, you make a lot of money in this profession, because is already, I explained that many times, this is the industry that many millions are burned in a single day. Okay, keeping track of your all this arousal level. I mean, you might have like too excited, too anxious. Asking yourself why you feel anxious or excited can often help you get out of the trade where you shouldn't be actually in the first place. I mean, you don't take any trade if you're too excited on that day. I'll tell you one thing, I'll give my own example, probably it might help you. If you are a mom of 3 children, working full-time, you have house to take care of, you have, of course, bill to pay as well. That's what it's, look, bill, I'm getting help from this market to get paid my bills. That's what I'm thankful for, and that's what I'm grateful for. That's what I want to make sure that every single person who's listening to this information, that, hey, you can learn this skill set once, your bill will be paid. You don't have to worry. And you can do from anywhere in the world. You just, all you need is a laptop or your mobile and internet. That's it. And you have some amount of money, which is always there. Okay. So you need to understand why you're anxious. I think I was going to tell you that whenever I'm very much, my kids are really making a lot of noise, and in front of them, I can't take trade because I can't decide it, because my attention is too much towards them. That's why I need to make sure that if I'm taking trade, I need to make sure that I'm not distracted. I'm very comfortable. I'm ready to take decision at the same time. And I know the market flow at the same time. And I know everything, that every rules that is ticked before I enter the market. Okay. Sometimes people also take trade. Oh, I'm too bored. I think you know that boredom is another type of emotion, right? And it is worth pointing in out as well. Traders who are bored also often lacks focus. You know, like you have no focus. A sign that you lack focus is when you find yourself going through the same instrument time frame over and over and over without actually really knowing what you are looking for. You don't know what you're looking for. Okay, and then that's why it actually you miss a very good entry point of the trade as well, because you were actually paying attention in something else, browsing internet or doing something else, and what happened? All of a sudden your focus is not there at the same time. So that's why you have to focus that much, laser focused. You have to be that much laser focused while taking trade, so that you don't miss out any single chance. You don't miss out any single indicators outlined in front of you. And get your priorities straight. You need to have a priorities. If you are a trader, look, you can't like take a trade for 1 or 2 days and don't take trade for another week. It doesn't work like that, guys. It doesn't work like that. You have to be consistent. Okay, you have to be consistent. I mean, sometimes I'm not consistent because look, I can tell you, yeah, because that's what I learned. It's not going to help you grow your account if you're not consistent. Doesn't really matter you lose 1 trade, 2 trade, but next, if you are consistent, you will win. I can guarantee that. But you do not engage in other activities when you're trading as well. That is very, very important. Okay. Very, very related topic. When you're frustrated, do not take a trade, guys. When you're frustrated, do not take a trade. Probably I will tell you, so you are, suppose there is an application, suppose in our platform where I'm part of, there is an application, it is helping millions of people to make a lot of money, right? A lot of money. They're paying the bills, they're actually getting retired through these applications, helping other people to do the same. And believe me or not, even you are copying someone else's trade, when you're frustrated and you already missed the entry point, probably the trade ideas were announced 2 or 3 hours ago. Now you're seeing it, the market has already moved a little bit and close to the TP. Wait for the next entry point to come. Wait, because market will 100% retrace. I think you believe that market will 100% retrace, and then that time take a trade, like make your decision. And do not let your frustration, like you already missed your entry point, do not just enter the market. Okay, don't do any mistakes. It's kind of, I would say, silly mistakes. Okay, so frustration is often the cause of trading mistakes that result from any of the previous mentioned emotions. Almost, it's not, frustration doesn't only come because you fear of loss, you already lost the trade. Number 2 is you already missed the trade. Number 3, you're very much excited, anxious, and there is some greed. You want to become a millionaire in 1 day or 2 days, which is doesn't going to happen. It's not going to happen, guys. It takes time to learn something and then take out the L, then you'll earn and earn and earn. Give some time for yourself to learn first. Just don't focus on, do some practice in demo account. I would always recommend every single person, all these newcomers coming to my platform, our platform, okay, anyone who is doing this independently as well, make sure that you practice in demo account. Okay, practice in demo account, and when you do some mistakes, at least that is a test and trial, isn't it? You're not losing your own real money. So actually, don't violate your own rules. You otherwise you lose money. People have blown their account because they have no discipline, and they blame the platform, they blame the application, they blame the even trade. It's not nothing to do with that. It's, you have to control your own frustration, control your emotions. Okay, and also you have to have your every time you have a negative, bad behavior pattern, make sure you actually do not trade on that time, because it will impact in your result as well. Not all the time, most of the time. Okay, so reading emotions from your trading decision sometimes helps you. I mean, you have to read. It does not matter whether you are reading sophisticated trading books or just browse around online trading forum, probably you have watched a lot of videos. You're also questioning a lot of educator about this, how this indicator works, and this. Almost every trader seems to be aware of the fact that psychology has a big impact on trading performances. Do you believe in that? Okay, I do believe too. Okay, so however, the way emotions affect trading decisions are very, very complex and are actually not that obvious at the first glance. Okay, so I hope it's making some sense, because look, your emotions plays a big role while you're taking trade. So when you think that biting nails, sweating, rubber, your hands greedily are the things that signal emotions while trading, this particular slide actually will offer you some valuable new insights as well. All I'm doing is I'm trying to make sure that whenever you're trading, not you have to make sure that you make a very wise, informed decision before entering the market, and make sure the entry point is very allocated for you, and you put the alert sign in the charts so that you don't miss out those charts. Okay, and also try to overcome all those negative impacts and emotions while you're taking trade, and so that you don't go in a negative path. Okay, okay, there's some, I would say, I missed the trade. Oh, although, I mean, however, whatever, although it had all the entry criteria. So especially what happens, especially in when you're in a beginning phase, okay, suppose you're a beginner in foreign currency exchange market, just started to learn how to trade, you started to analyze the chart yourself. You will think that, oh, everything was perfectly fine, but why did I miss that trade? Oh shit. I mean, you might think that inexperienced trader actually, or traders who find themselves in losing streaks, often act like a stern deer staring motionless into approaching headlights. So hopefully it's making some sense, because look, I'll be very, all these signs that you actually whatever you're taking decision, making decision, everything is actually happen because probably you saw everything, the indicators were perfectly fine. Wow, but what happened? You missed the trade. Do you know why? Because probably you didn't actually set the alert sign, some alarm or whatever. So if you notice that you constantly miss trades, although they meet all your entry criteria, you should actually decrease your risk. Okay, eliminating the possibility to risk a substantial amount of money will, I mean, of course, usually help decrease the amount of impact, I would say, the impact of fear-based trading errors. So there are like so many errors. This is basically the impact of fear. I mean, oh, I missed that trade because this happened and that happened. Probably, are you getting what I mean? After you have gained confidence and trust your trading strategy, you can slowly increase the trade size. Do you know what it means? When you are learning, I do recommend each and every person who is beginner must practice in demo account for 1 month. Must practice in demo account for 1 month, because you are testing yourself whether your strategy is going to work or not. When you start making some money in your demo account, then jump on your real account. And in that real account also, very small size. Okay, you're not going to be millionaire again in one night. That's why start from very small amount and slowly increase your lot size, I would say, you leverage your account, and then everything is perfectly fine. You can become a profitable, consistent, profitable trader of your life. Okay, so how could I have lost so much on this trade? Look, it looks so good. I mean, this sounds probably silly, because very, very true. For the beginner, especially for the beginner, the opposite effect will come into play if you actually find yourself losing so many trades actually, and large sums of money as well. In one trade, you lost a lot of money. Because do you know why? Number one, you over leveraged your account. Number two, you are not ready yet. Try in the demo account. Okay. Furthermore, traders who have a small trading account are more likely to risk a relatively large percentage of individual trade to grow trading account quickly, because you are not here to become a millionaire in one night. That's what I keep saying, that you will be millionaire, that is for sure. But have you got the plan for that? You have to have a plan for that. Okay, so the dominant emotions in these scenarios are greed mixed with overconfidence and ignorance. Very deadly combination. Okay, deadly combination. And then I would say that's why don't over leverage your account. If you're not sure, try in demo account, and always make sure that don't overconfident yourself, because market doesn't care whether you are confident, overconfident, you're a millionaire, you're, you know, I mean, you're bigger, doesn't really care. It only cares like it's news, right? Indicators, what is telling, and it will always do its part, it will do its movement. So I think, okay, another one I would say, I think it's going to turn around. I mean, you think that you already entered the market, you think that market will turn around because you forgot to put, you actually widened, you put your stop loss, oh, way too long. Okay. Okay, so hopefully, I hope it's making some sense. It's like same case continuously. This sentence is actually continuous of the previous case. Suppose you have lost a almost going to hit the stop loss, but what you did, you change your stop loss even more wider. Okay, and but you have a very small account, and what happens is eventually the market will never come back. It does actually, believe me or not, it does. It sometimes doesn't come back. Okay, so okay, and then you have seen that most of the people, what they do is actually, yeah, the similar position, but you are taking trade, you're trading based on who you hope, but you are not actually, also you're ignoring so many things at the same time. It doesn't work like that. Okay, so at this point you have already completely forgotten your trading plan. You have to, you know, just follow your plan. You have to follow your plan. The only reason why you are still in the trade is because you hope this is, or this trade will actually turn, and you don't have to take a loss. If you ever find yourself in this situation, immediately close your trade to be able to neutrally evaluate the situation. Hope it makes sense. Okay, so here we go. The trade looked so good and then, but what happens, it actually moved further, and it doesn't work like that either. A sure sign that greed is influencing your trading decisions is actually when you do not take profits. You already hit your target for the day and you're still waiting more target. It doesn't work like that. Okay, even though the price has already reached your take profit level, what happened? But you're still waiting bigger winner. Okay, you want to become bigger winner, and you didn't stop the trade, you still left the trade, and eventually it will come back, and it will actually be the worst scenario. Okay, so always stick to the plan you made before you enter the trade. Don't listen to the greedy voice in your head that pops up once you are in the trade. Oh, hopefully it's making sense. And how to deal with hindsight knowledge. Hindsight knowledge means like some people will think that they know everything, but still there's so many things to be learned. Okay, for example, there's some example I can give you, like, you have to make sure that means you actually you're implementing your knowledge at the same time. You're practicing a demo account and you are making some profit, and then you're hopping into your real account. Okay, so having said that, guys, I think this is the end of my slide, and I hope you got some value that how your emotions actually impact your decision of any trade you enter in the market. Make sure that you follow your plan, you follow your actually all this strategy, and listen to your leaders. Listen to your leaders, because your leaders already have been there where you are right now. They will tell you what not to do. All right, they will tell you what not to do. They will tell you practice in demo account first, and then enter the market, or use your live account later, and start from very small leverage. Don't over leverage your account so that you don't blow your account. Okay, so I love you all. Okay, so I hope you make a lot of money through this market, and I wish you good luck. I wish you good luck. Take care, and I'll see you in the next video.